rules have been put out today, and they put in place and give some clarity to what restructuring for the sector and for corporates will be looking like over the next few days. I have with me Mr. Setty from SBI to take us through all of the details of this. Thank you so much, sir, for speaking with us on ET Now. Let me begin by just getting your sense of these rules, these norms. They give quite a bit of leeway. The moratorium can be extended as has been mentioned and is part of the RBI guidelines. But importantly, you are also insisting on a personal guarantee of promoter if it is an unlisted company. Do you think there are enough checks and balances in the system to keep the bank safe?
Tamanna, thanks for having me here. I think earlier also in several occasions, people have asked me that how this restructuring is going to be different from the earlier ones, right? One of the important things to understand here is that this is a very specific restructuring package, which is aimed at those companies which are impacted by the COVID, number one. Number two, the option of restructuring is coming with certain boundary conditions. Apart from what Kamath Committee had recommended, the boundary financial conditions, it also comes with the fact that you can't extend beyond 2 years reschedulement, and you can't give moratorium beyond 2 years. So these boundary conditions, in my view, would help the banks to structure or restructure those companies which are truly viable. So if they are truly viable, and if the promoters are confident that their businesses will turn around, the personal guarantee should not be a problem at all. So to answer your question, one, on the personal guarantee, I don't think promoters will have any hesitation in giving because the businesses are viable. Number two, because of the boundary conditions which come with this, the lenders will not be able to go overboard, if I can use that word, to restructure those companies which are not viable. I think these two things would enable us that it will not be kind of a repetition of the story which we have witnessed earlier.
What is the kind of interest that you are seeing for restructuring so far, sir? Can you give us a sense of what has the demand been and what kind of companies, what size of companies or corporate borrowers especially are coming in for restructuring?
I think it is too early to see the numbers because most of the banks have the board policies put in place only in the middle of this September, right? 15th, 16th. And in a couple of days, we have put the frequently asked questions. And this information about the FAQs and the policy prescriptions are just reaching the corporates. And many of them have to internally evaluate. And also some of them were waiting for the Kamath panel recommendations also. Now that the clarity has emerged in terms of what kind of restructuring is possible, now I think they all will internally evaluate. So far, we have not got any formal requests from any corporates. But I presume sometime during first week of October, we may start getting some requests. Internally, I believe our numbers are not going to be large. Again, this could be different from bank to banks. Some banks may have exposures to the sectors which are badly impacted, like hospitality, airports, or aviation. So these kind of sectors which have been badly impacted, probably they would have large number. But in our portfolio, which we said in June earnings call also, that we don't have much exposure to these vulnerable sections. So our number of customers seeking the restructuring, at least in the corporate space, would be limited.
So just to give us a sense of how you would make this assessment as a banker on the ability for recovery, especially in sectors like aviation or hospitality or entertainment business, where the dynamics have changed. No one is very sure when COVID-19 will end, when people can go out in large numbers to such kind of public places, and businesses who have been hampered by this very change don't have visibility on recovery right now. How would you tackle such sectors?
So these sectors, if you really see, most of these sectors are asset-backed sectors, right? They have the assets which can generate income. The only issue what you pointed out in terms of how quickly these sectors will come to normalcy, that when whether the people will travel, whether the people will go out and eat. So that is the reason you see the maximum moratorium which is permitted is 2 years, in the sense that uh, it is expected that the normalcy will be restored. Even if you see most of the expectations about the rebound in economy is also talking about at least the first quarter, second quarter of the next financial year coming back to normal. If it is so, if you can build a restructuring plan, which will have a combination of moratorium and a combination and the reschedulement of the term loans which are coming up for repayment, I think that would definitely help. The viability, of course, again, it depends on how badly they were impacted pre-COVID. See, if you see in this restructuring plan, what are those companies which are covered? They're basically standard and SMA 0. That is not more than 30 days overdue. So they didn't have fundamental weaknesses when as on cutoff date of 1st March. It is only the estimate of how quickly the businesses will become normal. This is something. It's a mix of what we hope to happen and what is the balance sheet actually currently has. If it is too impaired, I don't think in 2 years it would be possible for them to come back. And that is the reason the committee also has recommended that many of these leverage and coverage ratios will have to be achieved by March 22, right? I don't know whether I've answered your question, Tamanna.
Does it leave enough space and discretion? Yes, to a large extent. But I'm just wondering, does it leave enough discretion and space for you as a banker?
No, the discretion, if you see, we have just did a quick analysis, you take the all rated companies and take out the last quadrant of this customers and look at the ratios which they have been achieving in the last 2 years, right? And we saw that there is enough room, even if you apply the Kamath committee benchmarks. That means, it is not that they are on the edge and if you restructure, they will cross that benchmarks. My view is that around 70 to 75% of the companies would be eligible within these parameters for restructuring if they seek.
All right. Thank you so much for your time, sir.
Thank you.
We'll take a very short break on the India development debate, but when we come back, you will hear from KK Mistry on the India revival mission. Stay tuned.